Yo, what's good, guys? It's Emjeey Trader as your mentor. So yeah, this is my legendary strategy breakdown of SMC Blueprint 2.0. Right. First things first. We are starting with the basics, the 1.0. Basics are everything. So
I think you can remove those things at the top.
or the buy and sell. Amangazi ngifundisa abantu njengoba ngithi guys manje ikhanda lami limele lasusha to my students. So but Vana, I'm doing this for you, ne? Like it's just like a session. I don't have to be professional or anything. Ne? Fair. So for you, my strategy is very simple, Joe. But one thing you must understand about is the strategy is actually market structure. So I can say market structure is everything. The market structure is everything. Market structure. That's the first things first, right? What is market structure? Market structure, to me, people define market structure in ngendlela, but to me, market structure is when the market is printing highs and lows. To me, this is market structure of an uptrend. Yeah, well, so what I was saying is that there's a very important thing to note is these highs, where the market goes up and it reverses. The market came up and it reversed. The market went up and it reversed. The market went up and it reversed. Went up and it reversed. So now this may not sound new to people, but it's a very important concept. And then now I introduce what's called dealing range. What is dealing range? Dealing range is when the market gives you a high in a buying scenario. This is an uptrend. In a buying scenario, it's when the market gives you, when the market takes out this high, when the market takes out a high, this is liquidity. The market takes out this liquidity, but we call it a break of structure. So the market takes out this high, and then we now have established a dealing range here. So a dealing range here to now is between this low and that high. Our dealing range is between this low and that high. That high might be continuous. The market might still be going up. It might still be going up. But as soon as the market comes back down, takes out another high, we have established our dealing range. The dealing range is this low and that high. Irregardless, as long as the market hasn't came back and violated this low, this is our dealing range, this low and the difference between this low and that high. So that's our dealing range, right? So we know we now have established a playground here. This is our playground. Our dealing range is actually the playground. The field is big, and if you don't know your role, what team I'm a striker, where do I play, you will have a problem. So the dealing range is sort of like that. I mean, among trader, I know what I mark this dealing range, and then I know what am I looking at. Yeah, well, the chart in fact in Kulu, it's broad, it's wide. People just jump into the chart and start drawing things without understanding a playground. So a dealing range is this low, the difference between this low and that high. That's my playground. I'm not looking at the market. The past has passed, but the past helps me to come this side. I track what the market did, 2 swing highs back. I will come here and be like, oh, the market broke structure. This is a break of structure. My first break of structure. This was my second break of structure. There's a high probability that the market will take out this high, because this high was taken out, this high was taken out, the second high was taken out. So there's a high advantage that the market takes out this high, because overall we are in an uptrend. So as soon as the market takes out this high, that's a break of structure, right? The liquidity to the upside, the external range liquidity has been taken out. The words awanandaba, really, they don't matter. These fancy words that people use to complicate trading are the ones that get our students to blow accounts, because now a student has to remember which liquidity, what's at. No, they don't have to get it confused. Once the market takes out a high, once the market takes out a high, that's now your playground. So this is my playground. If the market takes out, as the market took out that high, this is my playground. I now know, and I'm now expecting the price to come back and to come back to our demand level, this side, at the bottom side. Yeah, well, how is the market gonna get there? It's not going to fly. It's not going to fly to the market. Like Unas Tech Ninja has always said that the market is not a freeway. It can't come here and fly to this point and then give you a setup. When it comes to this, once the market breaks the structure to the upside, there's what's called here an order block. Immediately the market gives me a break of structure. Step 2. Step 1 is the break. Whether the break is to the upside or to the downside, this depends on the trend, right? That's a step 1. You look for the breaks. Whether the break is to the upside or to the downside. Step 2, you look for the order block. You look for the OB, right? Which is a demand or a supply. Now, it's a demand or a supply. So as soon as the market takes out this high, I know that we are in an uptrend. Now, I'm specifically looking for my demand zone, which is the order block. So this is the OB. This is the OB now. So my range is between that high and this low. The market can drop as much as it wants, but it will never break this low. This is a strong low. And this low becomes strong because it took out a high. So the market can play around. And with anyone who trades whatever strategy in the world, if they don't know or they are not aware about it, they also trade within this range. Either they are not aware or they have not put it into their minds. They are trading within this range, within a high, this low here, and that high. So since the market is up there and it broke structure, it's supposed to come back to our order block. This is our entry. This is where we take entries and so on. That's where we take entries. So that's another step of, that's where the patience now has to kick in. But with my advanced knowledge, I don't have to wait for the market to come back here, because it can take forever for the market to come back here. And this also depends on the time frame that you are marking these breaks on. But with my strategy specifically, the breaks of structure are on the H4. Now, that's the blueprint of my strategy. These breaks are on the H4. Let me do this. This is actually the 4-hour time frame. 4-hour time frame, strictly 4-hour time frame. When after the market takes out a high on the 4-hour, it takes out this break of structure on the 4-hour. I'm looking at this range between this low and this high. So now the market has to come back here. And then I don't have to wait for the market to come back here at some point. It depends with the clarity of the setup. Remember, we trade the structure. So for the market to come back here, it will retrace, but it won't fly, right? So it will build the structure to come back here. So as it builds that structure, it prints lows and highs now. This is where now I'm alert to say that, oh, this is a temporary shift in market structure, you know? This is a temporary shift. The market is not permanently changing the direction from buys to sell. It's a temporary, it's a retracement, to be simple with it. This is a retracement, right? So as the market retraces, we're still on the H4. The market will break a low. As it breaks that low, this is another break of structure to the downside. The market pulls back to a supply zone, which is my order block here. The market pulls back to that order block. I'm inside.
That's nice.
I'm inside. That's why as traders, one trader can see a sell, another one can see a buy. Why is that? Either the one that sees a sell is trading the counter trend, meaning that is trading the temporary pullback. The one that's seeing a buy is trading the overall trend. So to be on the safe side, I identify the overall trend and then I make it my friend, but I keep it in mind that, okay, currently the market is in an uptrend, but it's tired of buying. It's tired. So I have to make sure I utilize this retracement. So this is me. This is the part of my strategy where I trade the retracement. You get the point? So now, to be sure that the market is really retracing back, to be 100% sure, the market, even if you backtest this, the market might, like Oma retracer, it will take out 2 lows minimum. It will take out 2 lows. One, this is the second low, break of structure to the downside, first low, second low. This is where I'm inside now. The third retracement to the order block, that's where I'm in.
So on moments whereby the market will be so much impulsive and after breaking the first low just continue going to the upside, how do we realize that now the market is not going to give us a movement that is going to go down and respect that order block at the bottom?
This order block here, right? So this goes back to patience. I don't just enter trades randomly. I wait for the structure to be formed. You know why? Because the market because people cram the market, and this is why they lose. They cram it so much as people are so focused on patterns, right? And the market is about the patterns, yes, but not 100% pattern. Because if it was that like that, then everyone would be like far. So what you are asking is that since the market broke here, it can decide to keep on going up. That's where I'm not involved. That's where I'm folding my hands and I'm waiting for the market to break my first low. Hence I said my confirmation is when it breaks my first low to the downside, I relax. It comes back up, it breaks my second low. I know that the buyers are exhausted now. That's how I know that the buyers are exhausted. The buying market, the buying momentum is exhausted. You get the point? Now these sellers are stepping in.
Okay.
Yeah.
Let's say now it gets to the point whereby it's reaching that other block at the bottom.
Yes.
How do I get to understand that now it's time for me to buy?
Okay, so let me continue with this this retracement to our order block. So as soon as the market starts breaking lows to the downside, this is called the strength of the market. The overall trend is an uptrend until the market starts breaking a minimum of 2 lows to the downside, and then now you know that the buyers are now exhausted. They are no longer interested in keeping the price to move up, and then I utilize with these movements. See the market